Welcome back to the deep dive. Today, we're really digging into something fascinating, this intersection of fast-paced Silicon Valley tech and, well, the world of military innovation, specifically. We're looking at the impending IPO of Anduril Industries, big name, and crucially, what its potential impact is on another company you probably know, Archer Aviation, that's ACHR. Right, so our mission today is to really unpack this strategic partnership between Anduril and Archer. We're going to try and break down the good, the bad, and maybe, yeah, the potentially ugly outcomes for Archer, all stemming from Anduril going public. And why should you care? Well, this isn't just about two companies trading stock. This gives you a real window into how venture capital is kind of turbocharging the defense sector. It's about what that means for future tech, for investment, right at that cutting edge where defense meets Silicon Valley speed. It's important stuff. Okay, let's get into it then. The core here, the real heart of our deep dive, is this exclusive partnership, announced back in December 2024, between Archer Aviation and Anduril.
That's right.
And they're working together on a next-gen hybrid VTOL aircraft.
Yeah.
It's vertical takeoff and landing for critical defense uses.
Yeah, and what's really fascinating here is just how disruptive Anduril's model is. Unlike the traditional defense contractors, they often use that kind of slow cost-plus model, right? Anduril just develops its solutions, things like its AI platform Lattice or the autonomous Fury drone. They do it on their own dime, their own timeline, and then offer them at fixed prices.
Fixed prices, okay.
Which is a huge difference. Yeah. And the result, their gross margins are estimated somewhere around 40 to 45%.
Wow.
Compare that to the legacy primes, maybe 8 to 10%. It's just,
yeah,
it's a different world.
Okay, so Archer, linking up with that kind of model, that sounds like a really smart move, a huge win potentially. So what are the immediate benefits? Let's start with the good.
Well, the immediate win for Archer is validation, plain and simple. This exclusive deal instantly says, okay, Archer has serious defense capabilities. It kind of fast-tracks them into these very lucrative U.S. Department of Defense markets.
Right.
And look, if this hybrid VTOL they're building together actually achieves program of record status,
which means it's like officially adopted, funded, long-term.
Exactly. If that happens, it could mean recurring government contracts, non-dilutive funding. It basically embeds Archer right into the whole defense procurement system. A massive step.
But Archer isn't just banking on Anduril alone here, are they? I remember reading about other connections.
No, you're absolutely right. They're diversifying their bets, strategically speaking. Back in March 2025, Archer announced a whole separate partnership, this time with Palantir Technologies.
Palantir, okay, another big name in defense tech.
Exactly. And the goal there is building the AI backbone for next-gen aviation. They plan to use Palantir's Foundry and AIP platforms. These are Palantir's core AI operating systems, really good at complex data, to streamline manufacturing, supply chains, even co-develop tools for things like air traffic management and optimizing VTL routes. And even though this Palantir deal is more, let's say, commercially focused on the surface, it still really strengthens Archer's position in that whole dual-use tech space, especially because, Palantir already works with Anduril on government contracts.
So it connects them deeper into that ecosystem.
Precisely. It links Archer into this powerful network of defense-aligned tech firms.
Okay, so strong partnerships. And beyond that, financially, Archer seems pretty solid too. How does that factor into the good outcomes?
Yeah, that's a key point. It speaks directly to their credibility, I think. Remember back in December 2024, they successfully raised $430 million.
Right, I remember that round. Big names involved.
Huge names. Stellantis, United Airlines, Wellington Management, Abu Dhabi's 2.0. That brought their total capital raise to nearly $2 billion. So they don't have immediate financing pressure. And they've got Joseph Pantalone, formerly of Lockheed and Sikorsky, leading their defense strategy. All this positions Archer really well to benefit if Anduril's IPO sparks a sort of revaluation across defense tech. It helps establish them as more than just, a speculative aviation company. It adds serious heft.
Okay, so quite a bit stacking up in the good column. Seems like a lot of potential upside. But every high-stakes move has its risks. Let's flip the coin. Where do things start looking less positive? What are the challenges? Let's get into the bad.
Well, the big challenge, I think, is the sheer weight of expectation created by Anduril's valuation. It's intense. Yeah. Anduril just did a Series G round, right? At a $30.5 billion valuation.
$30.5 billion, that's huge.
It's staggering. Consider this.
Yeah.
That's double its valuation from 2024, which was $14 billion. And it's 4 times its valuation from just 2 years before that, $8.5 billion. The acceleration is incredible.
Wow.
So you're looking at a valuation multiple of roughly 30 times its 2024 revenues, which were around $1 billion.
It's 30 times revenue.
30 times. Compare that to, say, a Lockheed Martin, a legacy giant. They typically trade at maybe 1.7 times sales.
Okay, yeah. That is a completely different universe. So what does that crazy high benchmark actually mean for Archer day to day or strategically?
It means investors, the market.
Hmm.
They might start imposing, similarly, let's say, aggressive expectations on Archer's performance, on their growth trajectory, their financials.
Like if Anduril can do it.
Exactly. If Archer's own metrics, revenue growth, gross margins, whatever, if they fall short of these super high standards set indirectly by Anduril, then their stock could face some serious volatility.
Yeah.
Even if, the underlying business is solid and they're executing their strategy well.
Right. So the perception risk is high.
It's an enormous benchmark to live up to. Huge pressure.
That makes sense. The pressure cooker of market expectations. Okay, now let's talk about the ugly. This is where the really unpredictable stuff comes in, isn't it? The deeper risks.
Indeed. This is where Archer's increasing involvement in the defense sector itself introduces a whole new layer of vulnerability. Look, pivoting towards military applications is strategically smart in many ways. We've discussed that. But it also puts Archer squarely in the crosshairs of geopolitical risk, of fiscal uncertainty, these big external forces. Defense budgets, as you know, they're cyclical, they're highly political. A single election result, a sudden government spending freeze, maybe just a shift in Pentagon priorities. Any of those could stall or even kill the very programs Archer is now betting on.
Okay, but how is that fundamentally different from the risks in, say, the commercial airline business? That has cycles too.
It's different in its concentration and speed, I'd argue. Commercial aviation demand is, well, it's more distributed. Consumer-driven generally follows broader economic trends. Defense markets, they can pivot overnight.
Yeah.
Based on a crisis somewhere or a sudden policy change out of Washington.
Right. Much more centralized decision-making.
Exactly. So Archer is now tying its fortunes, at least partly, to outcomes it just cannot control. National security strategy, congressional funding battles, global stability, and if that flagship VTL program they're developing with Anduril fails to get that program of record status we talked about, then the whole defense narrative that's starting to underpin its valuation, that could unravel fast.
And there's another angle here too, isn't there? Sort of a guilt by association risk?
Yes, absolutely. That's a very real possibility.
Yeah.
Think about it. If Anduril's IPO, for whatever reason, kind of stumbles, or maybe just doesn't meet those sky-high expectations, if it falls flat, that could seriously sour investor appetite for the entire dual-use tech sector.
The whole category gets tainted.
Exactly. Public markets aren't always great with nuance. A miss by Anduril could easily drag Archer down too, even if Archer itself is hitting all its milestones.
Regardless of their own performance.
Regardless. And for a company like Archer, still pretty early in commercialization, that reliance on this defense tech optimism makes them particularly exposed to those, harsh swings in market sentiment.
Okay. So we've really covered a lot of ground here. We've looked deep into Archer Aviation's path forward and how heavily it's being influenced by Andurил's big IPO moment. We've seen the clear strategic upsides, the partnerships, the validation, but also that incredibly high bar set by market expectations and these pretty serious inherent risks of playing in the geopolitical and defense spending arena.
Yeah, and stepping back, looking at the bigger picture, this whole situation really raises an important question, I think. The question for you, the listener. Is this model, these fast-moving, venture-backed companies like Anduril creating dual-use tech, does this really represent the future of defense innovation?
Yeah.
Or does it maybe create a kind of fragile ecosystem, one that's maybe too dependent on unpredictable political winds and, frankly, speculative market valuations?
It's definitely something to think about. What does this all mean for how critical new technologies get funded, get adopted, especially in sectors like defense? How do these really high-stakes partnerships, these huge valuations, how do they end up shaping the world around us? We've given you, hopefully, a lot of good nuggets to chew on. Now it's your turn to mull that over.